Hedge fund research has just released performance numbers for the month of October. Hedge funds had their best month-over-month gain this year in the month of October, snapping a two-month decline and a third-quarter drop of 6.5%. Ken Heinz is the president of Hedge Fund Research. He is joining us now from our Chicago newsroom. Ken, thanks for joining us here on Money Moves. Glad to have you. So does it
Thanks
look
for having us on, Deirdre.
from just that 1 month as if things are turning around for the industry?
It certainly does. The third quarter, as the viewers likely know, was the fourth worst calendar quarter for the hedge fund industry in its history, posting a decline of approximately 6.5% over the quarter. We saw a recovery in the month of September, nearly 2.5%. Across the industry, with certain areas of the industry also doing better, particularly the equity-focused strategies and emerging market-focused strategies gaining better than 5% in the month of October.
And Ken, you're good enough to share some research with us. So it seems like equity hedge was about a quarter of the strategies that you were tracking. I'm just looking at relative value, macro, event-driven. How did the breakdown of which strategies the funds were investing in or being governed by change the results?
Yeah, equity hedge is closer to half of all of the reporting constituents. I think it's between 45 and 50%. Event-driven gained about 3%. That was the next strongest gains. Those have done a little bit better on a year-to-date than equity hedge, and those are around 20% of the index. Macro strategies posted decline. Those are also around 20, and the balance is relative value arbitrage strategies, which posted a gain of a little more than 1% for the month of October. Those strategies have been the strongest performers on the year-to-date basis and have also attracted the most investor capital on a year-to-date basis as well.
So, Ken, I'm glad actually for our viewers now they can see that, as you just mentioned, worth about a quarter of the equity hedge coming in at 27%. And we actually brought up a chart earlier, but I'd like to go back to it, and that is the firm by assets under management size. So it seems like the bigger firms still have most of the money, which I guess makes sense to anybody who follows the industry.
That's correct. The firms with greater than $5 billion in capital under management manage approximately 2/3 of all the capital in the hedge fund industry. So, and that's been pretty constant over the past few quarters. Each quarter that we track the assets, you see it maybe consolidate a little bit more or become a little bit more dispersed from one quarter to the next. But that number hasn't really changed much going back a couple of years.
And Ken, of course, we're also taking a look at more smaller firms being more numerous again, which is logical. But you've been tracking this data for a while. Is this number getting even bigger?
Which number is that?
That is to say, the number of small firms that are coming online, that are able to raise capital, that are able to hang out their shingle and say, we're a hedge fund.
Yes, we certainly have seen growth across every bucket of firm size. We have seen steady growth recently in the funds that are just launching out. Typically, a fund launches with something less than $50 million. Again, sometimes they have more. Sometimes they're north of 100 and upwards of $500 million when they launch. And those sort of ebb and flow with the risk appetite that is prevailing in the marketplace. So in the first half of the year, there was more of an inclination on the part of investors to take some of that risk and to be an early stage investor or a day one investor in hedge funds. We've yet to release all of the launches and liquidation data that pertains to the conclusion of the third quarter, but it's reasonable to expect that in as much as we observed risk tolerance falling over the course of the quarter, that propensity to be an early day one investor was a bit more moderate in the third quarter.
Ken, I also want to just highlight here the number of funds that have launched and that have had to be liquidated also seems like that number is going down.
That's correct. Through the first, again, we released the data on the third quarter a little bit in a few weeks, so that has yet to come out. But in the first quarter, we saw steady rises in both numbers of launches and liquidations across the industry, yes.
Okay, Ken, we thank you so much for the time. That is Ken Heinz. He is the president of Hedge Fund Research, joining us there from Chicago.